Hello, and welcome to the world of finance, where we deep dive on a multitude of topics that range from stocks, crypto, tax strategies, and much, much more. Be sure to give the video a thumbs up and subscribe, and hit the bell to be notified when I upload more content like this. Now let's get into it. What is a stock? In a nutshell, a stock is fractional ownership in a company. When you buy a company stock, you're essentially purchasing a small piece of that company, called a share. Stock can be bought and sold both privately or on stock exchanges and brokerages. As such, transactions are typically heavily regulated by governments to prevent fraud, protect investors, and benefit the overall larger economy. The two major U.S. financial security markets are the New York Stock Exchange and the Nasdaq. It is imperative to note that a stock exchange does not own shares. Instead, it acts as a market where stock buyers connect with stock sellers. Exchanges help provide liquidity in the market, meaning that there are enough buyers and sellers so that trades can be processed efficiently without delays. For those wondering, what is liquidity? Liquidity refers to the ease and efficiency with which an asset or security can be converted to cash without affecting its market price. The most liquid asset of them all is actually cash itself. Liquidity is essential to both brokerages and exchanges. Some brokerages you may or may not have heard of include Fidelity, Webull, TD Ameritrade, Cash App, Public.com, and many, many more. There are two types of stock: common stock and preferred stock. The common stock is typically a unit of ownership that carries voting rights decisions. In addition, preferred stock usually comes with a letter designation at the end of the security. For example, Berkshire Hathaway Class B shares sell under stock ticker BRK.B, whereas Class A shares of Orion DHC Inc. will sell under ticker OODHA until the company drops the A, creating ticker OODH for its common shares only designation. Preferred stock differs from common stock in that it does not carry voting rights but is legally entitled to receive a certain level of dividend payments before any dividends can be issued to other shareholders. What are dividends, you may be asking? Don't worry, I got you covered. A dividend is the distribution of a company's earnings to its shareholders and is determined by the company's board of directors. Dividends are often distributed quarterly and may be paid out as cash or in the form of reinvestment and additional stock. The dividends are paid in reference to each company's own dividend yield. The dividend yield is the dividend per share and is expressed as dividend price as a percentage of a company's share price, such as 2.5%. It is important to note that not all companies pay dividends. Some of the biggest companies you may have heard of whose stock that pays a dividend includes AT&T, Procter & Gamble, and Johnson & Johnson. I hope you guys enjoyed the video. Be sure to like the video and subscribe to the channel and hit the bell to be notified when I upload more content like this. Peace and love.